The US car market is collapsing right before our eyes. Dealerships across the country are in crisis mode. Prices are falling faster than anyone expected. Massive discounts, record-breaking rebates, zero-interest financing, and yet, no one's buying. The lots are full, the sales teams are desperate, and the silence in those once bustling showrooms is deafening. Something is seriously wrong, and it's not just about high interest rates anymore. For years, automakers blamed supply chain issues, chip shortages, and inflation. But now, they have the cars, they have the inventory, and they can't move it. Massive dealerships that once sold hundreds of vehicles a week are now struggling to sell a dozen. Ford, GM, Stellantis, Toyota, Hyundai. Every major brand is cutting prices, slashing profit margins, and offering deals we haven't seen since the 2008 financial crash. But consumers aren't taking the bait. Why? Because trust in the car market has been shattered. Think about it. Just 2 years ago, buyers were paying $10,000 to $15,000 over sticker price. Dealers were calling it market adjustment. Now, those same buyers are watching the exact cars they financed lose half their value overnight. A $65,000 truck from 2022 is now worth under $40,000. Trade-in offers are insultingly low. Buyers feel burned, and they're refusing to step back into the showroom. The auto industry's greed during the pandemic has come back to bite them hard. And it's not just about cars sitting on lots. Financing has become a nightmare. The average monthly car payment in America just hit over $750 a month. Many consumers are underwater on their loans, owing more than their vehicles are worth. Banks are tightening up, lenders are rejecting more applications, and repossessions are spiking nationwide. Even people who want to buy can't get approved. Dealerships are calling customers back to back, offering to make a deal work, but there's simply no money left to squeeze out of the average American household. Meanwhile, automakers are in panic mode. Ford has quietly paused production on several models. GM is pulling back on EV rollouts. Stellantis dealers are complaining they've got rows of unsold Jeeps, Rams, and Chryslers collecting dust. Even Tesla, which once had months-long waiting lists, is slashing prices repeatedly just to keep sales volume alive. The entire system that once thrived on scarcity and hype has flipped. Now, it's oversupply and apathy. And behind closed doors, dealers are starting to turn on the manufacturers. They're angry. Many say automakers forced them to overorder inventory, raise delivery costs, and now refuse to help with the financial fallout. Some dealers are even selling cars at a loss just to clear their lots before year-end taxes crush them. In some states, used car prices have crashed more than 30% since last year. It's a bloodbath out there. Consumers, on the other hand, are in a strange position. Prices are down, but confidence is gone. Buyers are holding back, expecting even bigger drops ahead. People have learned the game, wait long enough, and that $50,000 SUV might soon be $38,000. The fear of overpaying is keeping wallets closed. The car market's manipulation during the pandemic broke something fundamental: consumer trust. And without trust, no rebate or incentive can fix it. But the deeper problem goes beyond just supply and demand. It's structural. Automakers have pushed luxury pricing on middle-class vehicles for years. Entry-level cars have vanished. The affordable car is practically extinct. The cheapest new car in America now costs over $20,000 before taxes and fees, and that's for a compact. Trucks and SUVs, which dominate US sales, often start above $40,000. When the average income can't match the average price, the system collapses. At the same time, the used car market, which many relied on for affordable options, has been thrown into chaos. Rental companies and fleets are dumping vehicles, auction prices are crashing, and thousands of used car dealers are closing their doors. Many small dealerships simply can't compete with corporate giants offering factory-backed warranties and financing. The independent dealer, the backbone of local car sales for decades, is vanishing fast. And here's the scary part. This isn't a short-term correction. Industry analysts are warning that this may be the beginning of a full-blown auto recession. Car sales are slowing, profit margins are evaporating, and layoffs are spreading across factories and dealerships alike. Manufacturers are preparing for a storm that could reshape the entire automotive landscape, and the cracks are already showing everywhere. Major dealer groups are reporting double-digit sales declines quarter after quarter. Floor plan interest costs, the fees dealerships pay to finance their inventory, have exploded because of rising rates. Some dealers say they're paying thousands of dollars in interest every month just to keep unsold vehicles sitting on their lots. What used to be an asset has now become a liability. Showrooms that once buzzed with excitement are now quiet, desperate, and full of anxiety. Behind the scenes, dealership owners are cutting staff, slashing marketing budgets, and even canceling renovation plans they'd once boasted about. Some are begging automakers to buy back excess inventory, while others are simply walking away, handing back their franchise rights after decades in business. The dealership model itself is breaking down under pressure. The old way of doing business, markup, pressure sales, financing traps, isn't working anymore. Buyers are more informed, more skeptical, and frankly, more fed up than ever before. And it's not just rural or small-town dealerships feeling the pain. Massive metro area dealers, once considered untouchable, are now offering unheard-of deals just to survive. You can find brand new trucks being listed at $15,000 under MSRP, SUVs with factory cash stacked on top of dealer incentives, and lease deals that seem ripped out of the pre-pandemic era. Yet even with all that, traffic is down, test drives are down, sales are down. The average American simply doesn't trust the game anymore. What's more shocking is that this isn't just an American issue, it's global. Europe, Canada, and parts of Asia are seeing similar slowdowns. But in the US, the situation is uniquely brutal because so much of the car market depends on consumer credit. And right now, credit is drying up. With record credit card debt, rising delinquencies, and an unstable job market, even people with decent credit are hesitant to take on a 7-year car loan. The car industry was built on debt, and that foundation is now cracking. Meanwhile, the electric vehicle bubble that was supposed to save the industry is deflating fast. EV inventory is piling up across the country. Dealerships can't move them. Consumers are hesitant, worried about charging infrastructure, battery life, and resale value. Even with government incentives, EVs are sitting on lots far longer than traditional gas vehicles. Some automakers are quietly scaling back EV production targets, realizing the demand simply isn't there to justify the hype. And let's not forget the insurance crisis. Skyrocketing repair costs and inflated vehicle prices have driven insurance premiums through the roof. In some states, insurance rates have jumped over 40% in just 1 year. That means even if someone can afford the car payment, they can't afford the insurance payment. It's another barrier keeping potential buyers away, pushing more people to hold on to their old vehicles longer than ever before. The average age of a car on US roads has now hit a record high, over 12 years. People aren't upgrading anymore. They're maintaining, repairing, and stretching what they already own. Mechanics and parts suppliers are booming while dealerships sit idle. It's a reversal no one in the auto industry predicted, and it's terrifying the executives at the top. And here's the quiet truth that automakers don't want to admit. They overplayed their hand. During the pandemic, they learned they could make more profit by selling fewer cars at higher prices. So they built their entire strategy around scarcity, exclusivity, and inflated margins. But they forgot one key thing. Eventually, consumers fight back. And now, they are. Shoppers are walking away, waiting for the next crash, or simply saying, "I don't need a new car right now." That's the mindset spreading across America, and it's killing dealerships faster than any economic downturn could. What we're watching is not just a slowdown, it's a reset of the entire automotive ecosystem. Dealerships are collapsing under the weight of their own greed. Automakers are scrambling to find buyers, and consumers are finally in control again. But that control comes with consequences, because if this freefall continues, the car industry as we know it might never look the same again. And now, a ripple effect is tearing through every corner of the auto world. From parts suppliers to shipping companies, everyone tied to dealership sales is feeling the pain. Transport carriers that once delivered truckloads of new vehicles every week are parking their haulers. Mechanics at dealership service centers are getting fewer work orders. Even advertising agencies that handle car promotions are watching their contracts vanish overnight. This slowdown isn't just about unsold cars. It's about an entire economy that's been built around moving metal, and that engine is stalling hard. Banks are growing nervous too. Many of them have billions tied up in dealership floor plan loans, and with sales stagnating, the risk of default is rising. Some lenders have already started tightening credit lines to dealerships, demanding faster payments, or even repossessing inventory. Yes, you heard that right. Banks are seizing unsold vehicles directly from dealerships that can't make their financing payments. That's something we haven't seen since the Great Recession. At the same time, public confidence in automakers is plummeting. Every new announcement of price cuts, once seen as good news, is now viewed as a warning sign. People are asking, why are they slashing prices this much? What aren't they telling us? The once loyal brand followings that kept the industry stable, like Ford truck buyers or Toyota loyalists, are starting to fade. Shoppers are comparing everything, watching every deal, and waiting for the perfect moment. The idea of brand loyalty is dying, replaced by survival shopping. Meanwhile, dealership owners who survived decades of ups and downs are saying they've never seen anything like this. Some are calling it a retail apocalypse on four wheels. They remember when cars sold themselves, when every new model brought excitement and demand. But now, customers walk in with calculators, screenshots, and distrust. They're asking about depreciation before they even sit in the driver's seat. The excitement of buying a car has been replaced by anxiety, and that's a dangerous shift for an industry built on emotion and image. Even the auction houses, the backbone of the used car pipeline, are seeing chaos. Prices are dropping so quickly that dealers are afraid to buy. Cars that were worth $30,000 a few months ago are now going for $22,000 or less. The depreciation curve has turned into a cliff. Some dealers are losing thousands per unit, and they can't move inventory fast enough to stop the bleeding. Wholesale markets are frozen because no one knows what anything is really worth anymore. And while all this unfolds, automakers are quietly preparing for something bigger. They're restructuring, cutting costs, and preparing for dealership consolidation. Some brands are exploring direct-to-consumer sales models, bypassing traditional dealerships altogether. It's a controversial move, but in this climate, it might be survival. Many experts believe the days of massive car lots and commission-driven salespeople might be numbered. The dealership of the future could be smaller, more digital, and far less personal. But there's another layer to this crisis, the human one. Thousands of dealership employees, from sales reps to finance managers, are losing their jobs. The local car dealership used to be a cornerstone of small-town America, sponsoring little league teams and community events. Now, many of those lots are empty, and those workers are left wondering what's next. When the car market crashes, it doesn't just affect corporate profits. It hits families, communities, and local economies hard. And the warning signs are flashing everywhere. Bankruptcy filings from smaller dealer groups are quietly rising. Inventory financing defaults are up. And automakers' quarterly reports are starting to show the cracks they can't hide anymore. It's no longer a temporary slowdown. It's a market correction of historic proportions. Yet, despite all the chaos, manufacturers keep pushing out more vehicles, hoping volume will save them. But in reality, it's just deepening the oversupply problem that started this crisis in the first place. Dealerships are stuck between a rock and a hard place. Too much inventory to survive, but not enough buyers to escape. The discounts are massive, the offers are desperate, and the clock is ticking. If this downward spiral continues into next year, we could see the largest dealership collapse in modern automotive history. And as the spiral deepens, desperation is taking new forms. Some dealerships are resorting to aggressive, almost predatory tactics, bombarding customers with calls, texts, and urgent emails about limited-time deals that aren't really limited at all. Others are flooding social media with ads showing jaw-dropping discounts, hoping something sticks. But customers have grown immune. They've seen the fake markups, the market adjustments, the inflated delivery fees, and they're done playing that game. Trust once lost is nearly impossible to rebuild. Even automakers are starting to publicly admit that the market is out of control. Executives are using careful language in press conferences, talking about temporary headwinds and market normalization. But behind closed doors, insiders are leaking a different story. They're worried the bubble is about to burst completely. And when it does, it won't just take down a few dealerships. It could drag the entire financing and manufacturing ecosystem with it. Think about the ripple effects if this continues. Factory workers could face mass layoffs, shipping companies could cut routes, parts suppliers could shut down, and towns that depend on dealership taxes and factory jobs could face economic collapse. The automotive industry isn't just another business. It's one of the largest employers in the United States. When dealerships fail, it's not just cars that vanish, it's livelihoods, stability, and community identity. Meanwhile, consumers are growing more cautious by the day. Many are turning to private sellers, online platforms, and auction-style marketplaces instead of dealerships. Peer-to-peer car sales are quietly surging as people look for better deals and fewer middlemen. The internet has democratized the car market, and dealerships, once the gatekeepers of inventory and financing, are finding themselves locked out of their own kingdom. And the used car market is compounding the chaos. Vehicles that were selling for outrageous prices during the pandemic have now crashed in value, and lenders are holding the bag. Thousands of Americans are trapped in negative equity, meaning they owe far more on their car loans than the vehicles are worth. They can't trade in, can't sell, and can't refinance. It's creating a logjam in the market. Buyers can't move up, and sellers can't move inventory. It's a cycle that's freezing the entire industry in place. Now, add one more layer: technology. Automakers are racing to push subscription-based features, digital dashboards, and software paywalls, hoping to squeeze profit out of every driver even after the sale. But buyers see through it. They're asking, why should I pay monthly for heated seats or remote start? That frustration is building resentment, making consumers feel exploited by the very companies they once admired. Instead of attracting loyalty, these tech-driven add-ons are fueling rebellion. And that rebellion is spreading fast. More consumers are saying, I'll just keep my old car. They're rejecting the upgrade cycle that automakers rely on. Every time someone decides to drive their 2012 Camry or 2015 F-150 for another 5 years, it's another blow to a dealership already drowning in unsold 2025 models. The market is freezing not because people can't buy, but because they won't. Meanwhile, Wall Street is watching all of this closely. Auto stocks that once looked untouchable are showing volatility not seen in years. Investor confidence is slipping. Analysts are warning that if sales continue to slump through the next quarter, dealership bankruptcies could trigger a domino effect across the entire automotive sector. The dealership crisis could easily become a full-blown industry collapse. And yet, there's still denial at the top. Executives are smiling for cameras, announcing bold new strategies and next-gen models, pretending the problem is temporary. But the writing's on the wall. Consumers aren't fooled, dealers aren't hopeful, and economists are quietly preparing for what could be the most significant auto market correction in decades. Still, the question remains: what happens when the discounts don't work anymore? When the 0% financing and $10,000 off offers fail to bring buyers back? What happens when even desperation can't sell a car? That's the terrifying future dealerships are staring down right now, and many of them won't survive it. The truth is undeniable. America's car market is on life support, and dealerships are the first to feel the collapse. The flashy banners, the unbeatable deals, the desperate commercials, they're all signs of an industry in survival mode. The cars are shiny, the showrooms are spotless, but behind those glass walls lies panic, debt, and uncertainty. The system that once thrived on endless demand is now crumbling under its own greed. If this continues, we could be witnessing the end of the dealership era as we know it. The balance between automakers, lenders, and consumers has shattered, and rebuilding it won't be easy. For buyers, this might be the best chance in years to find real deals, but it's also a warning of how fragile the system truly is. The automotive world is changing fast, and what's happening in those empty dealership lots is just the beginning. Because when the prices drop and still no one's buying, that's not a slowdown, it's a signal. Something far bigger is breaking beneath the surface. Thanks for watching. If you found this video eye-opening, hit Hit that like button. Share it with others who need to know what's really happening behind the scenes, and don't forget to subscribe for more deep dives into the massive shakeups reshaping the auto industry. This story is far from over, because the next chapter might just change everything.